were? How did you know where the wealth resided? Well, it usually came in the form of people owning and controlling assets. If a guy had a lot of pigs and chickens and a lot of land, you knew he was the rich guy. Or if a person had a lot of relationships, and they knew everybody, they had a lot of pull and a lot of power. That's another type of wealth. Even things like, if just to speak on what's going on in the world, there was a rapper today that died in the Migos. His nickname was Takeoff. That's a loss of wealth. That's his family. It loses a multi-million-dollar asset. The Black community, when your sons get killed in the street, you're losing a multi-million-dollar asset in your family. A lot of when our young people are impacted even by the music and things like that, what that's doing is that's degrading the value of things that matter for us. So to get back on a more positive side, with the All Black National Convention, it's an opportunity for us to build our asset base by connecting with others who would like to trade with us. So when you had people like Larry Miller, the chairman of the Air Jordan brand, and billionaire Mike Roberts, and Trevor Booker, a former NBA player who's now a real estate mogul, sharing information with you on how to become wealthy, how to do what they did. Larry explained how he took Michael Jordan's brand from 150 million a year to 5 billion a year. That's the sharing of wealth. That's the building of an economy. And then at the same time, and we can go down the list. There's some other great people, George Frazier, so many, Riza Islam, a lot of really smart people that I respect. But then also you had medical doctors there, like Dr. Christina Parks and some others that were basically helping you with your health. Health is a big thing, and it should be a big thing. People use that term health is wealth, but they don't really understand how relevant and how accurate that statement is. Because think about this, not only is your health your wealth, but your health is more important than your wealth. Because if you lose your health, then you're going to lose your wealth, because it costs money to get your health back. And also when you don't have health, you can't build wealth for very long. So health was really big on my mind because of what my mother's going through right now with her health situation, right? And in our family, what I've noticed is that in the midst of this tragedy, it is the wealth of having 3 productive children that love her and have some resources and some ideas and things like that, that is allowing her to navigate this difficult terrain. You understand? So when you're going to the convention and you're meeting great people that you can do business with, you're building your wealth. When you go to the speed dating event and you meet somebody that you really like and you form a family together, which has happened at the convention, you're building your wealth, because a family that works together is going to be 100 times wealthier than a family that's broken into little pieces. Not 100 times, but maybe 10 times. It's much easier to build wealth when you're working together, because you have these, and I don't want to get too economically theoretical here, but you have basically the ability to specialize in your certain skill. So for example, if you're a single parent trying to raise the kids, you're doing everything. You're the babysitter, you're the house manager, you're the breadwinner, you got to go find a way to get the roof fixed. You have to do everything. But if you have another person, let's say you have a spouse and 3 productive, healthy children, then you can delegate those tasks. So what you then have is you don't have an individual, you now have an organization. An organization that is on code and working together is better than an individual any day of the week. So in the latest book that I just wrote called The 10 Commandments of Black Economic Power, I made it available for you guys on Amazon if you want to go pick up a copy. I focus specifically on 10 easy principles that any family can implement that will make you wealthy, because it comes down to culture. It really comes down to culture. So just speaking on culture, and I hope you'll allow me to kind of lay this out as we dig deeper into it. Well, we're going to dig into the weeds of the stock market as well, but I really want to lay this out because this is on my brain, and I think this can help you. You look to this morning, some of I had a few more conversations with Kanye West, and one of the things that came up was hip hop culture. And just today, this rapper by the name of Takeoff just died. He's part of this group called the Migos. I'm not going to lie, I was never really 100% in support of everything that they represented as a group, but it's not always their fault. I'm really looking at the people who are financing this, encouraging this, who are paying for this. I'm a financial guy, so I'm always wondering who's paying the bills, because I know that the person who has the gold makes the rules. And so long story short, Takeoff was killed last night in a dice game or something like that. And to me, I saw this and it's like, okay, this is the culture. The Beagles, they performed at the BET Awards. BET will always say the culture. They'll talk about the culture. Well, the culture is what gets these young men killed. And what if you want to know why I will support Kanye West without caring anything about his political affiliation. I'm not a Trump guy. I'm not a Republican, none of that stuff. I don't care. The reason that I support Kanye is because when we talk about the Black Core of Three and the Black Business School, and I brought that up. I taught, during the All Black National Convention, he and I talked about 10 times. And I said, we're not focused on the nonsense. We're not trying to get caught up in Democrat, Republican stuff. I don't really think much about Jewish people because they don't have more power than we do. There's nobody out here, in my view, who can match what a focused and empowered and intelligent Black man or Black woman can do. I just don't think, I think that if we focus on ourselves and making ourselves the best that we can be, we don't have to necessarily be mad about what somebody else is doing. I said, but where we do align is we're two Black men in a world that doesn't support people like us. And we also care about the same people. So I laid out our Black Core of Three in the Black Business School. These are our three core values in the school. In case you don't know, it's we believe that Black people should educate our own children, create our own jobs, support Black business. The reason that I was happy to have a conversation with him today is because he texted me over kind of a manifesto statement that he wanted to do as a result of what happened with his brother Takeoff. And in that manifesto, he wrote, educate our own children, create our own jobs, support Black business. I said, okay, I align with you. I support you on this. I know that some of the stuff happens in the music industry. I don't understand. I would never, I wouldn't marry a Kardashian. I'm not going to lie. But I am a Donda guy. And I absolutely 100% believe that if we stay focused as a people and we lay out a structured plan for our families, we can win this thing. The reason that you want to educate your own children is because this school system is destroying trillions of dollars in Black wealth by letting little kids go through these schools without even learning how to read. That's terrible. You should not allow that. You should be angry. You should be as angry about that as you were when when a police officer shoots a Black man. You really should. You should be as angry about the deaths on the south side of Chicago as you are about, Breonna Taylor and things like that. I'm from Louisville. I know cops on that force and I know people from that community. So I've the Breonna Taylor thing, I know more about it than I can even tell you. But, so if you educate your own children, then you get to shape their value system, which determines how they invest. Right? Again, this all goes back to economics and powernomics. If you shape the mindset of kids, you get to determine how they invest the resources that they obtain. You get to determine how they invest their intellect. You get to decide how they invest their money. You get to decide how they invest their time. Right? That shapes that. Right? The values. It's like the education and the wealth. That's like a big gun, but your culture and your values tell you where to point that gun. So if you point the gun at your own mother's face, then it doesn't matter that you had a gun. You probably should never have gotten a gun in the first place. You would have been safer to the people you love if you'd been unarmed. So there's nothing. So the only thing worse than an uneducated or unproductive Black person is a really educated yet destructive Black person. So we educate our own children. Because that's our trillion dollar power play. We create our own jobs because I grew tired quickly of begging people who hate me to give me an opportunity. I'm too smart and too capable and too hardworking and too unique for me to have to get on my knees and beg another man for anything. My wife wouldn't even want to sleep with me if I was out here begging other men to give me an opportunity or begging another man to let me be a man. If I was her, I wouldn't pick me as her man. I'd just go to the man, cut out the middleman, go to the man who is the man who tells the man what to do. So ultimately, I think that if we create our own jobs, that will go a long way to eliminating one of the factors that also destroys Black wealth in a significant way. When you're sending your whole community, your best and your brightest, to go work for their oppressor, what you're doing is you're engaging in a multi-trillion-dollar wealth transfer where you're doing all this labor, they're building all the capital. You're managing the business, they're owning the business. You're bringing in the revenue, they're keeping 90% of that money. That's not a way you can build wealth in a community. You can't build wealth in a community that is full of employees. Here's another way that working for white people destroys you. It goes deeper than just the money part, the mental health. One of the greatest factors in Black mental health and physical health destruction is the daily stress of what they call microaggressions. It's like getting 10,000 little bee stings every single day. It's like getting slapped in the face, 45 times, every hour. And eventually that's going to hurt, it's going to drive you crazy. So ultimately those microaggressions, that's a reason I believe that many Black men die so young, because every day you go to work, you're stressed out, you're mad, you're pissed off. My wife, again, I learned a lot of things from my wife. Those of y'all who don't respect our women, I encourage you to stop hanging around dumb women. Get you a smart Black woman. She can teach you some stuff. And one thing that she taught me is that when you are consistently exposed to contempt, you die earlier. Did y'all know that? Then literally when you're around, constantly around some people who don't like you, and you're always on guard, and you're always you're I forgot what that chemical's called. I wish my wife was around because I could ask her. Cortisol. When cortisol is constantly flowing through your body, you're just, it's like being traumatized over and over and over and over and over again. And when you do the research on trauma, I studied along with my wife when she became a certified clinical trauma professional. If you study trauma, you'll find trauma kills you. Trauma increases your chances of cancer. It increases your chances of mental illness. It will destroy your ability to pursue healthy relationships. And you see it everywhere. You see people fighting all the time. You see people unhappy. Black women are incredibly depressed, and men, we're depressed too. We just show it in different ways. Our depression might come out in sitting around smoking weed all day. It might come out in drinking liquor all day. It might come out in trying to sleep with a new woman every night, right? So ultimately, all of us are feeling the effects of this, but we just think that comes with being Black. I don't think that it has to be that way. So educate our own children, create our own jobs, again, so that you can get the mental health, physical health, as well as financial health benefits of ownership and control. Because remember, we said that health is wealth, but the difference is health is more valuable than wealth, because once you lose your health, you're going to lose all your wealth trying to get your health back. The third piece is support Black businesses. Why is that important to support Black businesses? Well, I'll start with a football analogy. If I'm the quarterback of a football team and I have the ball and I throw the ball down the field, who am I supposed to throw the ball to? Who do I throw the ball to? Am I supposed to throw the ball to the defensive back, the other team? Am I supposed to throw the ball to the cheerleaders? Am I supposed to, when I throw the ball, am I supposed to aim it at my target? Or do I just throw it out there and just hope somebody good catches the ball? Or just throw it and not even care. Just say, hey, I threw the ball. I don't care who catches it. No, as a quarterback, I have to throw the ball to my teammate. That's how I win. So with your money is the ball. You have the ball. You're playing offense. You're trying to score points. You're trying to get into the end zone. So you say hike, you back up, you throw the ball. And a lot of us are just throwing the ball, covering our eyes and just throwing it and just praying to Jesus that it lands in the right hands. And then what happens is that the defense grabs the ball, they run it back for a touchdown, and next thing you know, the score is 188-5. And then we're like, man, this ain't right. We losing. Y'all cheating. They ain't cheating. They're just exploiting your inferior offense. They're exploiting the fact that you didn't even make a plan before you stepped on that field. They're exploiting the fact that you didn't train, you didn't prepare, you didn't talk to each other, you didn't think about where you want the ball to go, you didn't aim when you threw the ball, so you threw it right to the defensive back. And he did what any normal human being is going to do. He took that ball, he ran it back, and he scored points for his team. Everybody's playing for their own team except for you. You may not even know that you may not even know what your own teammates look like. We ain't even wearing the same uniform sometimes. So ultimately, when you talk about supporting Black businesses, that is basically me saying that as the quarterback of your family, throw the ball to your teammates. Your teammates start with your relatives. I'm not even going 100% like everybody in the Black community. Let's start with your own family. When I throw the economic ball, I'm looking around for my receivers that I want to receive that ball. I'm like, okay, if I throw the ball to you, you're going to score points for our team. And if I can't throw it to somebody that I know, I'm gonna send it to somebody I'm connected to. Maybe it's just another black man that I just see on the street that's running a black-owned business. Hey, brother, how you doing? Here's some money. When I go to a hotel and I leave a tip, I always give the black person a bigger tip. It ain't because I hate nobody. I ain't anti nothing. I don't dislike white people. I'm very nice to white people. I get along with my white friends very well. But no, when I see that you're a teammate, oh, I'm gonna double that tip. You understand? So that's what you do. You got to support. And why do you do that? Why do you support black businesses? Why do you economically support each other? Well, because if you support the black businesses, then what happens is that the businesses then have a greater incentive to serve you and serve the community. Corporations go and they do business with the customers who are going to support their products. So when I'm supporting black businesses like crazy, what happens is that those businesses then come back and they come back with better products. They come back with other things that they can offer me. They come back with infrastructure. They come back with jobs that they can offer. Then what happens also is that when I say, hey, I want to build a black-owned school, then those black-owned businesses, those teammates that I've helped to support, come back and they say, great, we'll help fund that school. We'll become the sponsors of that school so you don't have to go outside the community to get your sponsorship. That's an ecosystem. That's a system. So I'm going to stop talking about stuff outside the stock market now. I'm going to get back to the market. What I will say is the reason I'd like talking to some of the rappers that actually kind of get it is because I believe that many of them are in jail. They rap about the trap all the time. A lot of them are in the trap and they can't get out of the trap. They get a little older, they want to be more educated, but they're trapped by a culture that wants you to be stupid. They want their families to have good mental health, but they're trapped in a culture that leads to mental illness because you're constantly worried about being shot every day. They want to be pro-black, but the people that control and manage them are telling them that they cannot be pro-black. So to me, I think this is the time. This is where we get an opportunity to make Black history on this. And so if you want to know my position on Kanye West, and I know it offends some of my friends, I can't worry about that, is I like the pro-black side of what he's doing, and I support that. I support him as a strong, independent, intelligent black man. Everything else, that belongs to him. That's another little piece I want you guys to kind of consider when you talk about what Black unity looks like. Black unity to me does not mean I agree with everything you do or every position you take. Black unity just means that we rally around the things we agree on. And then the other stuff, I just say, okay, I'm gonna get off the bus on this. I'm not gonna participate in that, because I'm not gonna stop doing what we do and being who we are. But if I find some people that will help us get this done, I'm happy to hear what they have to say. Okay, so let me hop in and you guys sent questions about the market. So let me kind of give you a general overview of what I'm seeing right now in the market. It looks like October was an extraordinary month. We're now going into November. Today looks like a little bit of a down day, down by a couple hundred points. Now, one of the things you got to look out for is coming up, you have announcements from the Federal Reserve about the Fed rally, or excuse me, the Fed rate hikes. The rate hikes are pretty predictable in the sense that everybody knows what the Fed is probably going to do, but they don't. Where the curiosity is they don't know how they're going to do it. They know that they're going to increase interest rates by about 75 basis points, which is 0.75, 75% of 1%, right? So I guess that's a good way to say 3/4 of 1%. The question is, how are they going to announce it? So what happens is that the chairman of the Federal Reserve, Jerome Powell, he gives a speech after he makes the announcement of how many basis points the federal funds rate is going to go up. And what he'll do is he gives what they call guidance in terms of letting you know where things are going and what he's probably going to do next time. So the market's going to be watching that very carefully. I really think, I'm a believer that this rally in October was partly expected. If you guys remember, a few months ago, we were talking about how during election years, there tends to be a run up in the stock market around the election time. And so that's kind of happening like right on time. But I just kind of wouldn't put too much stock in this rally. What I'm really looking for are the catalysts that will shift investor behavior. So the catalyst might be that if inflation starts to turn the corner, then investors will start to feel like, okay, inflation looks like it's going to come to an end. Money starts pouring back into the stock market. Some of your stocks, especially your tech stocks, start going up. Another catalyst could be Jerome Powell saying, look, hey, I thought we were going to have to do 75 basis points in the next meeting, but maybe we can get away with 50 because it looks like inflation is not so bad, or it looks like there's some economic problems coming from our consistent rate hikes that we want to avoid. So that's one of two things will make him change his current path. Either inflation starts to cool off or the economy starts to crack. And there's evidence of both. There's evidence that inflation is cooling off. There's a really smart professor by the name of oh gosh, I forgot his name. He's at the Wharton School, Jeremy something. But he said he feels like inflation's already going down. He feels like they just don't have the right data. I don't know if that. I just try to listen to all perspectives. I try to be a listener so I can form an opinion that's informed. And then, but then there are other people who are warning that there could be cracks in the economy as a result of the Fed hiking interest rates so fast for so long. So ultimately, all these factors come into play, and they all matter. And which one Jerome Powell reacts to will make all the difference. If he comes out and he says, I think we might be able to go a little bit lower in the next meeting, you're going to see the stock market just shoot through the moon. Why? Well, because when people feel like the economy is getting better, or not the economy, excuse me, when they feel like inflation's going down and all that, they're going to basically start taking on risk again. There's going to be what is called a risk on environment, where people are willing to take chances again. When that happens, investors will start pouring money into different stocks, particularly the tech stocks that they've avoided for a while. Lately, Bitcoin has become a source of interest because Bitcoin volatility is lower than the NASDAQ and the S&P 500 for the first time in 2 years. This is the first time in 2 years that the volatility of Bitcoin, which volatility is just kind of the up and down this, right? The volatility of Bitcoin has actually dropped below the S&P and the NASDAQ in 2 years. The reason this matters is because the last time that occurred was 2018. When that happened in 2018, Bitcoin did this. Bitcoin went straight to the moon. So if you want to know how I reacted to this, I started buying more Bitcoin. I accelerated my Bitcoin purchases. But I've always been buying Bitcoin, even during the decline. I've been buying it consistently because I'm a believer in Bitcoin and Ethereum, and there's a few other cryptos out there that I like. If you go to drboycecrypto.com, there's a list of some cryptos that I bought years ago that I haven't sold. I try to be consistent, and so when I marry an investment strategy, I try to stick with it. I don't try to change it week by week. I think that's too much. But basically, there's reason to believe that Bitcoin will be one of the big beneficiaries if we get back to an environment where people are willing to take risk. Because what happens is when the market drops a lot, people get scared and they only want to invest in the safe stuff. So they start running to the safe haven companies. And also another thing that happened this week that was really promising is some of the big companies like Uber, which is a stock that I've recommended to you guys before, has shot up. I think it shot up about 10% today. Because their earnings numbers came in pretty good. So there's a lot of optimism. There's a lot of reason to be happy about the fact that the American economy is so resilient. I wouldn't get caught up in the doom and gloom. I know people talk about the recession coming. That's not a lie, but you can't ever forget that you're in the strongest economy in the world. And I don't want you to get so caught up in the doom and gloom that you forget that there are opportunities all around you. All right, so let me answer some of the questions you guys submitted in advance. If you're on Instagram, I'm gonna have to shut this off, but if you want to join us in class, just hit the link in the bio and you can do a free trial in the Black Stock Market program. So let me turn this off right now. All right, so and also, by the way, guys, I'm gonna put a new installment of stocks that I like for this week. And so just log in at the blackstockmarketprogram.com, look under what Dr. Boyce is buying, and you'll see some of the stocks that I just added. All right, so hey, Dr. Watkins, would you look up a stock for me and give me your thoughts? Gabelli Utilities. Okay, Gabelli Utilities, GUT. All right, so let me I'll tell you what I think about Gabelli Utilities. Okay, let me see. All right, the Gabelli Utility Trust. Okay. Okay, the company's profitable. Stock's gone up over time. Doesn't look to be high risk. It's not going to make you a killing, but I wouldn't get mad at you if you invested in it. I wouldn't invest in this company just because I like to have just a little bit more spice in my portfolio. I'd be curious to know what drove you to look at this particular stock. But over the last year, it looks like it's down by about 14%. I would imagine this stock is going to do better when the economy recovers. Utility Trust is a closed-end, diversified investment management company which seeks long-term growth of capital and income. It invests in companies that provide products, services, or equipment for the generation of electricity, gas, and water. Okay, it was founded in 1999. This Gabelli just looks like a solid company. I don't have any reason to like if you added it to your portfolio, I wouldn't say, oh my God, why would you do that? You know, so it's not Dogecoin. It's so yeah. So I see it though, and I wouldn't buy it myself, but that's only because there's thousands of stocks you can buy that are more just in my view more interesting. But it's not it wouldn't be a bad investment in my opinion. What are your take on I bonds? Asked Anthony. I think I bonds are great. Inflation index bonds are excellent because you get that protection from skyrocketing inflation. You got to remember that with inflation being this high, you're losing 8% just by sitting your money in cash. You're just going to lose that automatically. So here's the thing, though. I don't think that's the end of the world. I think that sometimes we put a little too much emphasis on the inflation rate. You know, like I don't know. I know it sounds crazy, right? But I think about when I got my first job at Syracuse, and I made $115,000 a year. I never made that much money, and here it is 20 years later. So 115,000 a year 20 years ago is, I don't know, probably like $88,000 today, or 82 or 90 or whatever. It still seems like a lot of money though. Like it doesn't, if somebody told me they're making 115,000 a year, I wouldn't be like, oh my God, you poor thing, that's horrible. I'd be like, no, you're doing really well. That's good. You're balling. Congratulations. So I would kind of look at it like, I look at investing for Black folks a little differently. Not all Black folks, and this is a personal perspective, but I think that wealth preservation or income preservation and financial security is an important part of all this. And so rather than always thinking about it in terms of trying to keep up with inflation or trying to make as much money as possible, I tend to just think, especially when you talk about going into a recession, I want to make sure at the very least that you have the wealth that gives you long-term financial security, the income you need to make sure your bills are paid and that you're financially solid, and liquidity, which is basically the ability to obtain cash flow if you need it. Cash flow can come from a lot of sources. Cash flow can come from your job. That's why we like our jobs, because it's consistent cash flow. The problem is you got to give your whole life to this corporation and doing work that's meaningless to you, right? So that's not the ideal way to do it, because you're trading hours of your life for money. I just don't know if that's going to make you happy long term, or make you, feel good on your deathbed about what you did with your life. The other way to get cash flow could be even through your investments. Like, so on the Prime program is built all around cash flow. It's drboyceprime.com, drboyceprime.com. Feel free to take a look. But the Prime program is built around saying, okay, I got all these stocks and I don't want to really sell them, and I don't want to get rid of my capital base, but I need cash flow. So you can do things like sell stock options on certain stocks that will generate consistent cash flow. That's one of the ways I get my cash flow, to pay my bills and stuff. Another way to get cash flow is just really having access to capital on any way you can get it. I know that we get caught up in interest rates and, like, I don't want to borrow at 8% when I could have borrowed at 5%. And I get that. I totally get all that. But I don't know about you, but I remember when it's like this: if you're really thirsty, like you're dying of thirst, let's say somebody comes along and offers you some lemonade, and you're so happy to drink the lemonade, But then let's say somebody says, well, you know that lemonade has lots of sugar, and that sugar will give you diabetes and kill you. Okay, I get that. But I'm thirsty. I'm not gonna die of thirst because I'm scared to drink something that has sugar in it. Right now, I'll drink anything I can get my hands on. I would love to get some alkaline water if you got it, but since you ain't got no alkaline water, hand me the lemonade, please. So I think of that when I think about access to credit and capital. A lot of people make a very big deal about, and as they should, about interest rates and even predatory lending, like, oh, this check cash in place is bad because they charge, insane amounts of interest. And I get that they do. They really take advantage of the fact that you're financially thirsty, that you need liquidity. But why would a person who is rational and intelligent still go to a check cash in place? Has anybody ever truly been broke? Does anybody know what it feels like to be so broke that you'll literally take money from any way you can get it, other than selling your body or something or robbing somebody? But I don't know if y'all have ever felt the pain. I assume you have. We're all Black, so I bet at least half of us have felt this. The pain of being like super broke to the point where I remember going to like a check cash in place because I had a check and I needed cash. And yeah, you might take a big chunk of that check, but I'd rather have a check that's cashed than a check that is not cashed because I need cash flow. So ultimately, a part of your financial security should be linked to your ability to access cash flow when you need it. When more businesses die from a lack of access to cash flow than there are businesses that die from a lack of profitability. Do you get what I'm saying? Give me a yes if in the chat if what I'm saying makes sense. Okay, I want to make sure you guys can still hear me and see me okay. Are you guys there? Say something in the chat because I don't know if the chat's turned off or something. Maybe I accidentally turned it off. Or let me know if you can hear me. Okay. All right. Thank you, Polly and Tara. I appreciate it. All right. Good. I just want to make sure. All right. So next, the next question is from Sam Miller. Sam says, thanks, Dr. Watkins. Would you research Icon Enterprises, IEP, to evaluate if it's a good long-term investment? Okay. Icon Enterprises. Okay. I think that's run by the Icon guy, Carl Icon. Icon Enterprises LP operates as a holding company. It operates through following 8 business segments: investment, automotive, energy, food packaging, metals, real estate, home, fashion, and pharma. The investment segment consists of various private investment funds. The automotive segment holds ownership in Icon Automotive Group, LLC. The energy segment holds ownership in CVR Energy, Inc., which owns a majority interest in 2 separate operating subsidiaries. Okay, so they're pretty well diversified. That's good. They got their money spread out. It looks like they're teetering between profitability and non-profitability. They don't come off as a high-risk company. I like the investments that this company makes. And it looks like the stock's on a little bit of a run. It's gone up 8% in the last month. Now, here's the thing. When you ask about this investment or this company as a long-term investment, one thing that's really interesting is that if you go back over the last 5 years, it's had a negative return in the last 5 years. So with a stock like that, what I would ask myself is, okay, if the next 5 years is similar to the previous 5 years, how would I feel owning a stock that is, that has, that where the value didn't go up at all? Because it's like putting your money in a basket and then you come back to the basket and the same amount of money is there 5 years later. The good side of that, though, is that remember this: never feel bad when you make an investment and it doesn't go up in value. Never feel bad about that. Why should you not feel bad about that? Well, let me ask you this: what do most people do with their money? What is our biggest problem with Black people? Why are so many Black people that do make good money? I know Black folks that make 6 figures who are living paycheck to paycheck. I'm not making fun of you if you're in that category. There's a lot of people in that category. But where does most of their money go? They spend it, right? So I'm gonna ask y'all a trick question. What is the return on investment if I take my money and I go to McDonald's and I give my money to McDonald's? What is my return on investment if I go spend my money on McDonald's cheeseburgers or a pair of sneakers Faye had the right answer. Way to go, Faye. You're the smart one today. Yeah, when I spend my money, my return on investment is, in fact, it's not zero, actually. It's not zero. It's negative 100% for the boat, pretty much. It's pretty much negative 100%. Yeah, I mean, think about it, right? Think about, I want you to ask yourself this question. I want you to think about something that you bought in 2012 that cost you less than $500 that still has $500 worth of value. Can you name anything that you bought in 2012? Can you even remember what you bought in 2012? Yes or no? Do you remember what you did with your money? In 2012, let's say you made $60,000, $50,000 a year. Do you remember what you did with your money? No, most of us don't. So imagine if I went back in time, right? Let's say I went back in time and I played a trick on you. Let's say we went back in time and I took all the money that you spent on fast food, and I took all the money you spent on fast food, um, shoes you don't wear anymore, trips you took, whatever. And let's say I took that money and took half of it and I put it all into a stock that didn't go up in value. It just, stayed flat. Let's say the total that you spent that year on BS was like, let's say your BS number was like 15,000. Let's say 20,000, make it easy. And I took half of that, $10,000, and I put that into a stock, and the stock did not go up at all. Let's say it went down 10% over the next decade. Would you want that money? Would you be happy though that you made that investment? Would you feel better about your life if I was like, oh, well, you put 10,000 in, and it's only worth 9,700 now, but here's a check for $9,700. Would you feel better about that? Would that make you happy? Yes, you would. You would. Why would you be happy? Well, because it's better than nothing. See, you got to understand, like with investing, don't get so caught up in like, oh, this didn't go up, or that went up more than that went up, or this interest rate was too high and all that. What you got to understand is that your first goal as a wealth builder, particularly when you're trying to break generational curses, your number one goal is to stop the bleeding. When a doctor walks up on a patient that's bleeding to death, they're not thinking, well, we got to make sure they eat healthy and that they exercise so they can stay fit and and be as healthy as possible. No, the doctor's like, let's stop the bleeding so they don't die. So financially speaking, I think sometimes we get caught up in the wrong benchmarks. Like people won't invest because they're scared that their investment value will go down. And what they don't realize is that chances are, especially if you're Black, you're probably already making the worst investments you could ever possibly make, which is that you're going out to the club and dropping $200 or $300, and that money is gone forever. That money is now in a stripper thong, or that's it. You spent that money at the bar, or you went to the mall and spent $400. That money's gone forever. You spent money on fast food or whatever. That money's gone forever. So you got to stop the bleeding first. So a bad investment is typically, not in all cases, but in most cases, or let's say a mediocre investment. A mediocre investment is 100 times better than spending your money and having nothing to show for it at all. If I went back in time and I took half of the money that you spent on fast food alone, and I put that into a low risk asset over the last 20 years, every single one of you would have more money than most white people. You would be in the top 10% of all wealth builders because you were consistently invested. So I want to lay that out for you so that you'll pick the right benchmarks and not be so hard on yourself, right? Don't, like if a person is, 500 pounds and all they know how to do is go get up and walk around the block a couple of times a day, they shouldn't be beating themselves up because they're not running marathons or because they ran the mile and it took them 20 minutes to run a mile. Well, that 20-minute mile is better than sitting on the couch. So just do your best. Don't let anybody make you feel bad, and don't let anybody scare you. I think that's extremely important when it comes to investing. All right, so let me hop in and saw another question. Natasha says, hey, Dr. Boyce, can you explain what is meant when people say you don't shop for real estate by the home price, but by the monthly mortgage? Um, okay, I'm guessing that people might say that. Honestly, I haven't heard that a lot, but actually let me just do a Google on it and I can kind of give you my breakdown, my interpretation of it. You don't, I'm just literally typing in there. You don't shop for homes based on the price, but you shop based on the mortgage. I'm gonna see who said it and what their logic is. Uh I don't even see anything that comes up. I don't really believe that. I think I think price matters. I think you look at both. When I look at the price of an asset, I'm looking at the price of it that I'm paying relative to what I believe the true market value to be. That's what matters to me, right? Um, and I'm not going to overpay something just because the monthly payment is lower. Like that doesn't even make any sense. That's like a, that's a trick car salesmen use on you. They'll just extend your loan out 6 years so that you can buy buy the same car but get a lower payment, and be tricked into making a purchase you may not have wanted to make. I think you have to look at both, honestly. The mortgage payment is a function of it depends on these things: the value of the asset that you're buying, the interest rate that you're paying, and the amount of time that they give you to pay off that loan. Those are the three variables that drive what a mortgage payment is. If you give me the value of the asset, the time to maturity of the loan, and the interest rate, I can tell you what the mortgage payment is. So to talk about the mortgage payment without talking about the value of the asset, that's just a little bit weird. They're not disconnected. They're connected to each other. If I move one, I'm going to move the other one. If everything else is constant, if the interest rate is constant and the time to maturity is constant, and I change the mortgage payment, well, I got to change the price. So never ever go and say buy a car from a car salesman where they say, okay, the payment on this car is $400 a month. You say, oh, I can't afford that. That's too much. And then they come back and say, guess what? I can get you that same car for $340 a month. Woo! Your next question should be, okay, so what changed? How did you get the payment down? Now, here's the thing. If they got the payment down without changing any of the other variables, then touchdown, you pretty much won. Better yet, scratch that. If they got the payment down and they did it by reducing the interest rate, they kept the time to maturity the same, or they got the payment down by changing the cost of the car, then you win. That's good for you. But if they don't tell you how they got the payment down, then what they're doing is they're doing a rope-a-dope. They're doing a Trojan horse on you. They're basically getting you to buy the same vehicle, and they're leaving the cost of the vehicle the same, the interest rate the same. They're extending the time that you have to pay the loan back. So now instead of being in economic jail for 5 years, you're now in economic jail for 6 years. So you just got a bigger trap, and it's designed to make you feel better. So I don't believe that shopping based on the mortgage payment versus the value of the home makes sense. I mean, maybe there's an idea out there that maybe will reframe my thinking on this, but I look at both. I look at everything. I want to know all the information. I want to know how everything connects. I don't, those economic tricks don't work. And by the way, with real estate, if you want to know my 2 cents on